Hey guys, welcome back to the Foxhole. It's Dr. StopLoss here. Wanted to drop a quick video to go over a couple of things that have been on my mind. The first is, what's going on in the market right now? What's going on this week? A lot of really interesting news coming out. My top 3 highest conviction plays. And towards the end of the video, I'm taking you to the dojo, my dojo, for just a bit. We're going to take a moment to look at some lessons, really to better master ourselves and our emotions in the market, which is starting to be really important, based on the news that's coming out. And so, getting right into it, US stocks are expected to face significant tests in the coming week due to earnings reports from major companies. It's getting into Q3 earnings, specifically like Tesla and Netflix. There's also delayed inflation data coming out, as you can see in the CPI report right here. And there's ongoing US-China trade tensions. Market volatility has also increased recently, with concerns over regional US banks and trade disputes adding to investor anxiety. The percentage of S&P 500 stocks in an uptrend has declined, signaling potential underlying market weakness. The September CPI report, which was due Friday, will be closely watched ahead of the Federal Reserve's monetary policy meeting, where another rate cut is anticipated. And so, getting right into it, revived US-China trade tensions and credit concerns at regional US banks drove the anxiety. The CBOE Market Volatility Index, the VIX, which we're going to look at in a second, known as Wall Street's fear gauge, has surged in recent days and hit its highest level in nearly 6 months on Friday, talking about this last Friday. The spark for the latest volatility was a surprise resurgence in US-China trade tensions. Stocks slumped late last week after the US threatened to significantly hike tariffs by November 1st over China's rare earth export controls. We talked about that in the last video. And so this is going to be a key issue for the markets in the coming week. And this is really important. US President Donald Trump also confirmed on Friday he would meet with Chinese President Xi Jinping in 2 weeks in South Korea. The percentage of S&P 500 stocks in some form of an uptrend declined from 77% in early July to 57% as of Tuesday. So just to make that more clear, there's a percentage of S&P 500 stocks that were in an uptrend, and they were at 77% of them were in an uptrend in early July. Now those are down to 57% as of Tuesday, while the number of stocks in a downtrend increased from 23% to 44% over that time. The narrowing gap highlights emerging cracks in the market's foundation. This is what Turnquist says. If you have a fewer number of companies that are actually moving higher, but the indexes do move higher because of the mega caps, that's a really important divergence. Attention's going to be on the third quarter earnings coming up after major banks started the reporting season on a strong note, so financials did decent. Aside from streaming giant Netflix and electric vehicle maker Tesla, which is going to be Wednesday. Keep a lookout for that one. A lot of volatility around that. Other companies due to reports are Procter & Gamble, Coca-Cola, RTX, and IBM. That's Raytheon and IBM. Corporate results and executive comments will offer insight into the economy as the U.S. government shutdown has stopped economic data releases since October 1st because of the government shutdown, including monthly employment data. And so corporate reports and what companies say is really our best chance at assessing what the broader economic health is. Yeah, these earnings reports are going to be important. And also this backed up Fed data that's going to be coming out. It will release the US Consumer Price Index, so inflation for September on Friday, 9 days late, saying the CPI data allows the Social Security Administration to meet deadlines for timely payment of benefits. And so I just want to get into talking about the volatility that's happening in the market. We looked at this in the last video too, but I just wanted to give updates. As you can see this last week, the VIX really spiked and it got up into my zone here where I'm starting to look at picking up stocks, not really options because, these option prices really spike up. The option premiums spike whenever the VIX is high, whenever volatility is high. And so it got up there for a second, but then it went right back down to the low 20s. And so we're going to keep an eye on this as things go forward. Just keep in mind, any spikes over 30, this is when the actual transfers of wealth are happening. When the 10% of the population who owns 90% of the stock start to get scared and they start to dump their stocks and the volatility's high and the fear index, which is really the fear index of the elite and the whales in the market, start selling that's when you should start looking at picking up some of your stocks that are really beaten down. And so we're going to take a closer look at some of the market here and just get right into it. As you can see, this is the S&P futures. If you can see the last week here, it's just kind of been this like consolidation, but you see the wicks of the candles here are actually pretty long. I think it represents some of the volatility that happened after this big drop right here, right in there. And so we're starting earnings now, and so we'll see if this just continues and gets more volatile. The Dow Jones kind of follows something similar here, as you can see. A lot of kind of consolidation, but at the same time, there's these giant wicks that are happening. The NASDAQ is the same, and the Russell is also kind of the same, the small caps. And so Bitcoin, this is important. As you can see, Bitcoin has kind of crossed this support line here, which kind of kept us back to, when was this? This is back in July here. Back in July, we've kind of crossed under that. And so it's going to be important what happens right here, if it's going to fall back down or if it's going to rebound. Another thing too is Bitcoin's just been in this downtrend for really the last week or so, last week or two. And yeah, it's just going to be really important to kind of see where this keeps going. If it kind of rebounds or goes down, we'll take a look and see. Looking at the US dollar. So the US dollar has still kind of been in this zone here. Hasn't really done too much, just kind of kept in the zone. It's still down in the dumps, still cheap, which is not great for the economy. Gold is killing it. It's just absolutely going nuts. And it just has continued to go nuts. But something to take a note of, look, this thing has been killing it for a long time. But look at that candle right there, right? So what's going on? We're going to see there have been a couple of these in this run, but nothing quite like that one. We'll see if this is some kind of reversal, if people are kind of getting out of gold. There's a lot of talk about people getting into gold because they're trying to take their risk out of the US market. And so we'll see. I don't know. That might be something to take note of, see where gold kind of goes from here. But this thing has just been killing it for so long, it's hard to even imagine it's turning around anytime soon. Something else I just wanted to point out, kind of close to gold, this is as you can see up in the top left here, it's XLU. I don't know if you knew this. There are certain ETF or tickers that follow the sectors in the market, and it's usually XL something, XLY, XLK, which is tech, XLP, XLE, which is energy. XLU is utilities, and generally people get into utilities as like a safety thing. It's something with low beta value, which means that it's not really that volatile. People kind of put their money here when they're trying to park it. And so that also had a bit of a dip the last few days. And so just something to keep note of. Emerging markets. So this is looking at markets from around the world that are coming up. It also takes into account some of China's market too. And so you can kind of see where that whole like trade war reemergence talk came back, rebounded just a bit, and we'll kind of see where this goes from here. It's been a bit flat for a while, other than that crazy volatility there. And so I don't know if you knew this either. China has its own ETF, at least the Chinese market. It goes under FXI. And so you can kind of see where the tariff talk came up again, or the trade war talk came up, and it's still kind of in that zone. So it's, filling in that huge gap that happened there. And so we'll kind of keep an eye on this, what happens. If it's going to continue down or up. Things are kind of in this weird place right now with volatility starting to spike. Things are moving, but also not moving. Oil is also down in the dumps. Not looking good here. Not great for the US economy. And so kind of piecing this all together, the market's kind of in a strange place right now. There are certain indicators that are not so great, and then there are certain indicators that are great. And so there's some divergences happening in a couple of places, and volatility is also spiking. So in these kind of times, it's really important to have a plan of what you're going to be doing, what kind of stocks or options or what, cash, what are you going to be holding? So it's good to kind of recheck your process, look at your system, make sure you got it pretty tight and you're not just throwing money around or playing around, because this could really whip anyway, up or down. In a lot of places. And not just that, you might go into one sector and that might crash, but then the other might go, explosive and rocket off into space. So moving forward, I want us to imagine something, okay? I want us to imagine a scene where there are many individuals who are blind and they come across an elephant, which they have never come across in their lives. As you can see here, we have a good picture of that. Let's say, this guy, he's touching the trunk. He's touching the trunk of the elephant and he says, "Oh, this feels like a spear." He doesn't know it's an elephant. He just thinks that's a spear. And this person here is touching the tummy. She thinks it's a wall. This guy's back here and he's touching the butt and he thinks it's a portal to another dimension or a rope. One of the two. So I want to ask you, who do you think was correct out of these people, out of these individuals? Who was it? And so that's right. No one was correct. But if these people or these individuals took time to come together and discuss each point which they had discovered, or at least their own perspective on this, and they were open to each other's viewpoints and they tried to synthesize them together into one, they might get closer to discovering that this is an elephant and ultimately discovering the truth of what they experienced. So, in short, what's the lesson here? The elephant is reality, and these individuals are us. These guys right here. These are us. This is us. And all we're trying to do is attempt to understand the truth. The deeper moral is that individual data points and perspectives are inherently limited and subjective, and therefore people should be humble and open to other viewpoints and understand the limits of your methods, and to understand that partial truths can contribute to a more complete understanding of the whole. But how does that apply to the market? So let me tell you, it's why we're using both fundamental and technical analysis. And so if that's the first time you've heard that, fundamental analysis is looking more at the balance sheets, the income statements, the cash flow statements, all the ratios, financial ratios. We're looking at the actual company, the business model, what are their streams of revenue, kind of everything that keeps the business as a business. And technical analysis, which is the price action, looking at the momentum of people in the market, really using the price as the main guide for what we're doing. And we're using both of those. And the goal of that is to get us closer to the reality of a company and its function in the stock market. And we're trying to use high quality data points which reflect reality closest and bring us closer to the truth, which can give us some conviction in predicting the future. One last thing I want to point out. Sorry that these are popping up on the screen. This is actually a new PC and I haven't activated Windows yet. So just ignore those. It's all good. And so, moving into the meat and potatoes of this video, my top 3 highest conviction stocks. All right. My top 3 highest conviction stocks. We're going to get into these. So, my top 3 highest conviction stocks have a lot to do with the current AI spending and the AI boom that's going to be happening over really the next 5 to 10 years. All this crazy capex and this really high spending in AI. And so, it's kind of the basis of my thesis of what's going to be happening and why I chose these stocks. There's going to be 2.8 trillion being invested in AI through 2029. Companies like these big tech companies, they're all leading the investments. They plan to spend over 300 billion in 2025 to stay competitive. And that is just a repeat of that in particular. And so that's a big part of why I think these companies could make significant returns in the next 5 years. And so the first company that's on my top 3 highest conviction stocks is Google. Why Google? So on the fundamental side of things, Alphabet's cloud and other bets businesses are scaling fast. Its cloud segment profits are increasing rapidly, and its EPS, which is earnings per share, grew 27% in the last year. Very strong balance sheet, very low debt to equity, and excellent profitability. Net margins are in the upper 20s. Companies heavily investing in AI, cloud, autonomous vehicles, and other growth vectors such as Waymo, for example, and large capex cloud builds, which give optionality behind its core ad business. Why this matters for 2030, about 5 years from now, with a massive ad platform base to fund new growth businesses and strong financial health, it's positioned to compound as new segments mature and scale. And now we'll look more into the technical side of things. So this is Google's chart right now. There's something really important about this that I kind of want to point out. is, right now it's kind of in this consolidation. It's kind of stuck around upper 230s to low 250s. But the thing is you'll notice there's this big like gap right here. There's a good chance that it will ultimately get filled at some point. And so that's why I have these kind of price targets here. Really I have alerts set up so if it dips below these that it'll notify me because I think these would be great points to get in. But honestly, if you're thinking in the long term, just picking up at any time would be good for this. Just start slowly dollar cost averaging into this would be good. But I'm kind of looking at, you know, somewhere in the low 230s to 220 to start trying to pick this up heavy. These are some of the technical indicators for Google going into MACD, RSI, and ADX. These kind of help you figure out momentum. These help you figure out the momentum of people coming into the stock, getting out of the stock, and how strong is the trend right now. And so going into this, MACD, it's in a good spot. It looks like the signal line's about to cross over. And so this is a pretty good sign for the stock. Something to keep a note of, RSI, when this is above generally 70. A lot of people will put it either 70 or 80. If it's above that, that means that the stock is overbought. So it needs some time to cool off. A lot of times, though, when these stocks are just running, they'll go over 70 for a while. So it's hard to say that that's a great way to make decisions based on this. But, it's up near the 60s, right? In the mid 60s. And so it's just something to keep an eye on. It's kind of in a higher spot. 30, if it's below 30, that would be oversold. And so that'd be a good buying opportunity, for example. ADX is another indicator. It's the average directional index. Really what this does is the ultimate use of it is to help you decide, like, what is the strength of the trend? If this is below 25, just general rule of thumb, that means the trend is not that strong. Everyone has kind of their different points, what they believe is strong, for example, in this indicator. But when I see this below 25, that might be more so consolidation, or if the stock is in a trend, then that means, if it's below 25 and it's in an uptrend, for example, the uptrend might not be as strong as you think. It might have a better chance of turning around. Above 25 is a good sign that the stock is going to continue the trend in whatever way it's trending, up or down. And so if you look at Google here, it's kind of right there, it's kind of in this weird spot. Not really sure if it's going up or down, but overall, it could go either way. This is something else. It's still Google's chart. The blue line right here, that is the 20-day simple moving average of the prices. This orange line I have is the 50-day moving average of the prices. And so when the 20-day moving average is above the 50, that's a pretty good sign for the trend. That means it's trending up. You'll see on the right, I have the volume profile, which shows kind of where people are most heavily invested and what price targets they are. And so you'll see that we have kind of this chunk up here, people that bought. And so if some of these people start to liquidate, or they start to think that, they may have jumped the gun and buying, or they feel like, oh no, this gap's going to get filled here. It might go back down maybe to somewhere in here below 200. They might sell out. It might cause some selling pressure, for example. So you'll kind of see down here in 170 that there's actually this really big kind of chunk of people that have bought in that area. So I don't think it would go down that far. You can even see here in the 190s, there's a good bit there. So those can act as kind of supports at times too, because that's where a lot of the volume is. My next stock is Meta. Meta is my second stock, which I have the highest conviction in. And there's a lot of reasons for this. Going into the fundamental side of things, Meta still shows double-digit revenue growth, just 16% year over year on Q1 2025, and strong net income growth of 35%. It's driven by its ad business re-accelerating. Its margins and financial health are excellent. Gross margins at 81 to 82%, which is insane. Operating margin at 44%, and debt to free cash flow extremely low, which says that they have a lot of flexibility in the way that they're using their money. Massively investing in AI data centers and expanding its user ecosystem. Billions of monthly users on Instagram, which gives it leverage for new monetization opportunities. And so why does this matter? Meta's core ad engine remains robust, Meta's core ad engine remains robust, and its large investment into AI and expanding global platforms creates a runway for significant new growth if monetized well. So this is just the chart of Meta. It might look like, not a lot is happening here. It's kind of at the same spot as it was back in the beginning of the year. Same price as about same price as February, kind of before the whole April stuff went on, and then the recovery. But I do want to show you some of kind of my analysis with this. It was actually trending up, and I know that's like, whoa, whoa, there's a lot of stuff going on here. But it was trending for quite a while, for really like a year. It was actually like 2-3 years. It was trending up before that dip in April with the tariff scares, and then it rebounded. And you can kind of see here that on the rebound, the support from that trend ended up being resistance. And you can see it again up here. It was resistance. And so right now we're kind of at really important support levels of 700 and I think 740 maybe is a little bit lighter of one. It's below that, which could be some resistance right now. There's a good chance it could end up breaking higher to retest it up there again, breaking 800 at some point soon if things go well, especially on earnings, which is coming up here. I think it's kind of October 30th, maybe, or kind of end of October there. I wanted to put this indicator here. This is the linear regression line. And so it's just showing how the price has reverted to the mean over the course of, and by the way, this is the 3-year. And then each candle is 1 week, right? So this is over 3 years, literally since 2022. It's followed this linear regression, the price. Even with the tariff stuff, it still came back, right? And it's pretty convincing. It's really just followed this really well. And it tends to revert to the mean. And so, something to look out for is it coming back up above 750 and then heading up into the 800s, probably within, I'd look for it before 2026. This is the MACD, the RSI, and the ADX for Meta. So you can see that's also about to cross, which is a good sign. The RSI is really low right now. It's down in like the 40s. And so ADX is also pretty low. So right now there's no real strong trend that's going on. I think that a lot of this kind of has to do with what's going to happen on earnings in the next week or two, something to look out for. And I'll tell you this too, the Wall Street analysts, they always tend to get Meta wrong. They usually get it really wrong, actually, not even close. And so if that happens again, this could go up a good 50 to 100 points, in my opinion. This is the volume profile and then the moving averages again. And I kept the linear regression there, the pink line as well. You'll see that the 20-day moving average crossed over the 50-day, which isn't great. But you'll also see that there's this huge chunk of people right in this price range up at like 700, low 700s there. And that's kind of where we're at right now. We're at a crossroads. And so we're going to see probably within the next week or two, this is going to pick a direction and stay there for probably the end of 2026 or not the end of 2026, until 2026. We'll kind of see which direction it picks. My bet would be that it comes back to the linear regression line. And so guys, my number one highest conviction pick, and if you know me, then you know it pretty well, it's AMD. And so why AMD? Let's get right into it. AMD is winning in AI data center workloads. They're getting large deals like this 50,000 GPUs for a supercluster, which is showing strong demand for its high performance compute. Improving fundamentals, although historically smaller margins, it's positioned as a high growth momentum company in semiconductors. It's focused purely on growth rather than dividends, which means capital is fully directed into scaling product lines in AI servers and gaming. So why does this matter for 2030? This AI infrastructure boom is likely to accelerate. If AMD executes and continues to win design wins, its growth could compound meaningfully, albeit with higher risk. Competition and, the semiconductors are cyclical. So here's a chart of AMD. You'll see this giant gap that happened after some of the deals that they came out with OpenAI and Oracle, which happened also right in here. 2 deals that came out. Who knows how many other deals they have in the works right now. It's kind of in this really volatile consolidation period. It needs to breathe a little bit and take some time to kind of figure out where it wants to go. But earnings, as you can see, is down here. It's on, I think, November 4th. And so that's going to be pretty big, especially keep an eye out for the top line revenue. If it's over 10 billion, that's a crazy sign because this earnings report is going to incorporate the MI 355 chip that's they just put out in June, kind of May, June of this year. And so it's going to have, it's going to show the revenue from that. And we're going to get to see what some of the hype behind their products are right now. And that's going to be reflected in that number in the revenue, the top line. And so I know this looks a little messy, but I just wanted to point out a couple of things that generally when AMD moves, it tends to trend very, very strongly. And so I point this out. This was March of, oh, let me change that. This was March of 2024. And then it was in this downtrend. And you could see it followed the downtrend and the channel like to a T. Multiple times did it bounce off of these. And then it even followed this like mini downtrend or this channel inside of the downtrend. And then once it got to the bottom where they both crossed, that's where it made this reversal up into a new trending here. You'll see that it also had a wedge, and that was kind of some consolidation for like this big move up. I actually think if this wedge lasted a little bit longer, this move might have been a bigger move than it actually was. And when it picks a direction, it really goes with it. It really follows that trend. And so I think it's going to be an uptrend for quite a while from here. Looking at the MACD, the RSI, the ADX for AMD right now, you can see the MACD is going nuts. I think it's still got some juice in it. The RSI, you can see it's overbought. And so it's been overbought, but that doesn't mean it's particularly going to turn around just yet. You look at the ADX, which is, like I said, the strength of the trend. It's over 25. It's a pretty strong trend right now. It's going to be kind of tough to turn it around unless there's some, big macro factors like, the second trade war that people are talking about, issues with China, the Fed, these are things that might turn these things around. This overbought RSI is something that could add to that. Looking at the volume profile, there's not a lot of volume up here yet. There's a lot down here in the 150s and 60s. I think that's a pretty good floor for it. There's also a huge gap between 200 and the 180s here. So that's something to look for if it somehow turns around or if earnings are not as great as we're kind of anticipating them to be. This could be a good floor for it. And so I just wanted to have an honorable mention real quick, Amazon in particular. And there's a reason why I say this. So really with this, I just want to say that Amazon's margins are insane. They're one of the biggest companies in the world, massive scale, global reach, and it's got repeated investment into the business, into logistics, cloud, and AI. Amazon's built a moat that's difficult for competitors to replicate. And so why this matters for 2030, it allows it to fund growth in new verticals like cloud, advertising, and fulfillment while leveraging scale. It continues to grow these platforms and improve margins as a long growth runway. Looking at its chart, you'll kind of see something funny here is that really it hasn't moved too much, right? Like you think about it from this time right here, and that was November of last year. And then this time right here, getting close to November of this year, the price is pretty much the same. These are linear regression lines. From the very beginning of the year, there's been a slight increase. Maybe you might have made 7%. If you caught it at the bottom, you might have made about 30% or somewhere close to that. Looking at the volume profile here and also the simple moving averages, the 20-day just crossed under the 50-day here. We're kind of sitting where there's a lot of volume. So it's also kind of a crossroads for this company as well. Something else I want to point out, the MACD is in a good place. Might have a turnaround sometime soon. RSI is really low for Amazon. It's one of the biggest companies in the world in the 30s right now, which means that if it turns around pretty soon in regards to the price, could run for quite a while. The ADX is also below 20, which shows that really it's not trending right now. It's kind of in this consolidation time, and there's been a lot of selling pressure from insiders. I know that's been in the news for a while. One other thing I want to point out, so this is the option chain. I know it's a little stretched out here, but thing is that an options chain can give you a good idea of, the implied volatility or the in my terms, like how much are people excited or how much are they hyped for this company? And when it's low, you can kind of catch it when nobody's looking. And so I just want to point out that you'll notice a lot of these are in the low 40s and even the 30s. And so that means that a lot of people aren't looking at Amazon right now. You could actually pick up this stock, and if some good news comes out about it, you could make money just from the volatility that comes into this. And so now I want to get into something important here. We're going to take a moment and go into the mental dojo of Dr. Stop Loss. And so, hundreds of years ago in Japan, there was something called Bushido, and it was a Japanese code of conduct for the samurai, meaning way of the warrior. That's what Bushido means. It emphasized virtues like honor, loyalty, and courage, often over life itself. It developed over centuries, becoming more standardized during the Tokugawa shogunate, and it was heavily influenced by spiritual practices like Shinto, Buddhism, and Confucianism. Often associated with martial prowess, the code also demanded self-control, courtesy, and a strong sense of justice and honor. And so before we wrap up here, I want to give you my personal trader's code, kind of like the samurai, like they had their Bushido. I'm going to give you the trader's code in hopes that you can take it and make one for yourself. These basically are just, to me, like a few reminders that help keep me grounded when the market gets really noisy or when like VIX is spiking, people are getting kind of scared. There's a lot of scary headlines coming out. And so the first one is, I trade what I truly understand. Conviction only comes from clarity and seeing the signal through the noise by putting in the work beforehand, and not from hype and not from someone else's opinion, not even my own. You can't even take my opinion 100%. The next one is that staying calm is my edge. I try to keep a relaxed mind and see what others miss when they're panicking. You can stay calm and you can keep your mind clear. It broadens your field of vision. You don't get stuck in a tunnel of emotions. The market is a dialogue and not a battlefield. And I didn't put this one in quotes, but let's say there's the ocean, right? And that water flows this way, okay? And there's a big wave right here, right? And then this one kind of dips on this side. Does that mean that this side of the ocean won and this side of the ocean lost? No, it doesn't. And that's because it's a principle really of the universe that things come back to equilibrium over time, especially in systems full of uncertainty like the stock market. You don't fight the market, you listen, you should respond to it, and you should adapt. And you really need to observe the direction which the system is flowing. You have to look where the waves are going. Every loss is tuition for mastery, and that might be a difficult one to take in. But really, each mistake you learn here is a lesson that you've paid for. So make sure you learn from it. It's better to lose 75% of your account value on a mistake when your account's worth $2,000 and really learn from that lesson early rather than to lose 75% of your account when your account value is at 10 million. You have to learn to take your losses as your greatest teachers. Next is my analysis is art informed by data. And so great trading, it really is a blend of logic and creativity. Numbers tell you a story, but intuition paints it. It's true because of the uncertainty of the system. You will never, and I say never, operate in the market with 100% certainty. And in turn, all of your focus should be on refining your inputs over time. And so, guys, I want you to take this and let me know your trading code and the rules you follow in the comments below. You know, it's good to remember that your mindset isn't just part of trading, it is your edge in the game. So thanks for your time, everyone, and let's have a good week this week. If I hit the nail on the head with one of the stocks that's your top picks, and we had somehow the same top picks, please give this video a thumbs up. I'll catch you guys in the next one.